Phew! G'day crew, I'm Oscar Pelazon and welcome to another episode of Tube Time Tuesday. Down here at Trig Beach, light onshore blowing, not a lot of swell. I thought I was going to come down and maybe snaffle a couple of little fun runners, but no such luck today. So I thought I'd come and have a chat to you today about the three key roles that you as a business owner have in your business and why it's essential that you understand what that role entails and that you ensure that you're appropriately remunerated for each of those roles. Well, firstly, your time and your skill are valuable. Not everyone can build their skills to your level sufficiently. And secondly, time is finite and it's perishable. We only have 24 hours in a day, and once that's gone, we never get that back. We're on to the next day. Secondly, business is inherently risky. In fact, it would be one of the riskiest asset classes if you spoke to an investment manager. And when we take on risk, there should be a reward that is commensurate with the level of risk that we're taking on. So first, your role is as an employee, and that involves the tasks that you undertake and the leadership that you provide to yourself and to others in the business. And we need to be remunerated for that time and skill. And the trick here is that it needs to be at market value. Yep, for startups, the founders may reinvest what they should be paying themselves back into the business due to limited cash resources, and by investing in the future of the enterprise and increasing the value of that in the future, right? So I get that. But for most small business owners, too often they are not paying themselves what they would have to pay someone else to come in and fulfill that role in their business. They take nominal remuneration, easy for me to say, and they pay themselves last. So remember, whatever you forego now must generate a significantly bigger return in the future. Secondly, you take on a stewardship role. Often that's in the form of a directorship. You're director of your own private company. And this role ultimately is to ensure that the business is being run to the maximum benefit of the owners, right? With it comes exposure to risk and liability. Actual directors of companies are liable for the debts of the company should certain criteria not be met. That is, they're trading insolvently. Remember, if you're taking on risk, you must be rewarded. In public companies, directors are handsomely remunerated for that role. Most small business owners, they don't consider what they should be paid for taking on that role within their business. And finally, you have the role of an investor in your business. You have either bought a business or you're reinvesting significant profits into the business that has a net worth, right? Hopefully to continue to grow the value of that business. Well, what do professional investors look for? They look to maximize the return on their investment. And they analyze investment options, cash, property, shares, crypto, and they look at the riskiness of those assets and where they can benefit and generate the best returns on their limited financial resources, their cash, right? Well, as I mentioned, your business is an asset and it's yours, and you need to get an appropriate return on the value of the investment in that asset. Separate to the first two returns that you're also seeking, being as an employee and as a steward. So when you're looking at what your business is making you in the form of profit and wages, you need to ensure that you've been properly rewarded for each of the roles that you've assumed, which in your business by default as the owner is all of them. Too often, when I review the performance of established business, the business owner could invest their money in high quality property or blue chip shares and generate better income returns, better capital growth, and for less risk than they've been getting in their own business. And if they went and got a job, guess what? they could make significantly higher wages working for someone else than they pay themselves. Now, I understand we'd rather work for ourselves and there's non-cash benefits of doing so. But my question to you is, are you happy with your returns? If not, work out what you should be generating for each of those three roles and then look at what needs to be done to improve the business so you can generate those appropriate returns. Remember, you've invested and continue to invest significant time and effort and money in your business. And you face significant risk to your personal brand, business relationships, personal relationships, and your long-term financial security. So make sure that you're making or have a plan to generate a return in your business that you deserve. Now, I reckon a well-run small business is one of the best investments you can make. The key is to ensure that firstly it's well-run and that your investment is giving you the great returns that you deserve. That's it for me today. I look forward to seeing you next week for another episode of Tube Time Tuesday. Happy days. You.